ladies and gentlemen, we have returned. Okay. Obviously, I haven't posted in a little bit, but we're gonna go start hot here, right? A little bit low in terms of stock news, anyway. So it was a little bit of a time for a slight break, but we're gonna go into stock analysis mode as we always do, and we're gonna talk about AMC, right? Obviously, this might be a contentious video. Can't lie to you because I have some opinions here that some may disagree with, some may agree with. When you talk about these stocks that are super popular right now, some people get very, very butthurt about it. So if you don't agree with them, first thing, obviously, to understand what you're even talking about with the stock, you got to know what the underlying company is. You don't just, well, some people that invest in AMC just invest in a company, they don't know what it is, but you got to know what the company is. So obviously AMC, most well known as AMC theaters. You've seen them; they're everywhere. Maybe you haven't partaken in going to one, but it's just a normal viewing experience. Movies, yeah, everyone knows what a movie is, right? So obviously a lot to consider in terms of that. We'll get into that in a little bit as far as the whole industry is concerned, but then we'll look at the stock because obviously we have an idea about what movies are. We know that, okay? So, AMC here, we look, and it's trading at a market cap of $27 billion, right? Okay, $27 billion. Price to sales, 23 on the price to sales. And you look at historical rates, it used to be trading darn cheap. And you wonder what happened. Obviously, you look over the last 6 months, the stock's up 2,400%. Yikes. When you look at that, it's a little shocking. Even a year out, you see this massive bump here. It's astounding. We're talking about in January, the stock was worth $2, now sitting at 58. So you see where that price to sales is really skyrocketed, as well as the market cap. So again, I believe this market cap's closer to correct at $29 billion, actually. This $27 billion, I don't believe it's accurate. I think it's $29 billion off of my calculations, at least. So you get that data, and you see it's not a beautiful looking number there. It really isn't. Then we look at the financials, and it's worth noting. So obviously, the entire industry, the movie industry, is one that's been hammered beyond belief, and you can see that in terms of the revenue of this company. Trailing 12-month revenue, not even $500 million of trailing 12-month revenue. Even in the good times, 2018, 2019, setting box office records, $5.4 billion. This is a company that really, even prior, wasn't showing much growth in terms of revenue anyway. So overall, obviously it's been hammered. Trailing 12 months has been awful for this company. And not only that, it's been pretty awful for the profit line too. You see how profit declines quite significantly. Operating income has fallen to a massive negative number, $1.8 billion lost in the last year. Concerning because that number's even risen from the 2020 number. It's not a great thing. Net income line of negative $3 billion in a year. Yikes. So this company's obviously losing money hand over fist. Not a shocker, right? Because of the environment, they were almost forced to. I mean, there's no way that they could have avoided this necessarily, just based off of the industry that they're in. So, with that said, what are the positives of this company? Well, I think the positives are we're returning to a state of normalcy, right? You get new movies are coming out quite frequently. Again, you see off the platform. If you looked last year, there were no new releases really. People weren't filming, but there are a lot of new releases. Really a lot. And if you've been to a movie lately, I don't know if this is just me, but I feel like the previews have now taken up literally an hour. Last time I was in theater, I saw 20 previews for movies. 20 before the movie started. It took 45 minutes. It was one of the most wild experiences I've ever seen, especially because the movie was supposed to start. The ticket said when it was supposed to start, and it was 45 minutes after that because 45 minutes of previews. I've never seen anything like it. I get it, they're very excited. New movies coming out, and their industry's been dying, but it is what it is. But we just saw Fast and Furious open up to a nice weekend of $70 million. Pretty exciting, actually, because historically, it's actually a pretty good number. It's the best opening weekend since 2019 Star Wars Rise of Skywalker, which is obviously a big number to get near. Really good number to get near. Obviously, A Quiet Place, not quite as much. Quiet Place 2 drew $48 million off a holiday weekend, but not as exciting as it might have been. But this is good to see because people are going to see movies. Now, obviously, we need to see that. A Quiet Place 2, $6 million only. Oh, gosh. Hitman's Bodyguard's Wife, which literally just came out, $4.8 million. Ugh. Peter Rabbit 2, $4.8 million. Cruella, $3.7. Now, again, I mentioned Cruella for a reason, too, because it's worth mentioning. So, obviously, we're not shocked that this is an industry that had to change last year. And how did it change? Well, you get companies like Disney, which are going straight to release on their platform, Disney Plus. So Disney is now offering on their new movies, they'll offer them in theater, or they'll offer them on Disney Plus for a premium. It's been $30 pretty consistently for their new releases, which is very expensive, by the way, in my opinion, because you're obviously already paying the fee for Disney Plus. And I do think at some point they'll lower that to $20 for new releases, because in that case, a movie theater might be the better option. Some people enjoy the experience of a movie theater, but some people really prefer just viewing it at home. And because of this competition where all of these streaming platforms are going to offer their movies at home, the movie theaters are going to just lose a lot of business because of that. I can't lie to you. Some people are loyal to movie theaters. They really are. And they will continue to go. But others will prefer the comfort of their own home. They only went to movie theaters so they could see the new movies early. They wanted to see them before they had to get, released 3 to 6 months down the road, either on DVD or to the streaming platform after that. So that is a concern for me, that this is going to force people out of theaters, because it will, in my opinion. Let me just tell you, when I went to see A Quiet Place 2, which was the second weekend, I see why it raised so little. There were literally 2 people in the theater. And I'm talking the $5 show, okay? We're going to the $5 show, right? This is the cheap ones. $5. What did we get? 2 people in the theater. Obviously, they were the most annoying people of all time because they were just talking the whole time on the phones. But, forget about that. Still, it concerned me. It really did. This was 6 p.m. on a Friday night, and there was, I think, 5 cars in the parking lot, and I'm assuming 3 had to be staff. No, they probably parked around back. But still, it was incredible. There was no one in that theater at all, completely dead. Maybe the scene picks up around 8 p.m., I'm not sure, but it concerned me. So you think of a thing like AMC. Look, the stock's not up because of any business rationale. There's no rationale behind the business model that gets the stock up. This is a meme stock, right? They have their own subreddit here. I mean, we're talking about memes. That's all they do. So this, promoted. Oh, I do have coffee stains. Thank you very much. I might borrow some of that. So this is literally just a company that has risen, like GameStop, like really so many others right now, because of some retail investors. Typically, Wall Street Bets would be your culprit. That saw that there were some hedge funds that had short interest in AMC. They were shorting these stocks. And the way that they did this was they were going to stick it to them. They were going to stick it to the big hedge funds by everyone purchasing these shares and making the share price go up, which happened. It did significantly, as you see by this. They not only had we thought this initial bump was something, 350% back in January. We thought that was massive, right? Then they halted trading of these shares, and it stayed stagnant for a while. And then, guess what? The second wave, they came back. Wall Street Bets said, we're buying more. And they did. I think it's crazy. So, in my opinion, this thing is somewhat of a ticking time bomb. And why do I say that? Well, this is a big concern for me. They've just reported that more than 80% of AMC shares are held by retail investors. Not the big hedge funds, not institutional, not insiders. Not institutional, not insiders. These are retail investors. This is you and I. 80% are held by just normal people. And what do normal people do? They're very irrational with their shares, right? They can buy and sell in an instant. Once someone sees a downward movement, there's nothing saying that a majority of these investors might not sell, because they could. In fact, short interest on this company is at a ridiculous all-time high, which makes sense. This is pretty relevant of any company like this that has shot up so much. Look at the growth in short interest. Now at an all-time high, obviously, because I'm not shocked, nearly $6 billion worth of short interest, but crazy stuff, in my opinion. So what are my opinions on this stock? Well, here's my price targets, okay? This is what I believe is going to happen, and obviously there's some bleak numbers here, and you might not be happy with this. I think this is a ticking time bomb. I can't lie to you. I think there will be a time when the retail investor gets bored of AMC, because there's nothing rationale-wise that is holding this stock where it's at. They've done some great things as a company and taken advantage of this situation. They've raised capital and released new shares off of this new stock price. They've made a lot of money off of this, right? It's helped them raise a lot of capital, which is something they need to do because they're hedging billions of dollars every year at this rate. So when they're hedging so much money, they needed to raise that capital. Now, as the industry as a whole, frankly, I do think it's not going to be what it was prior. It's not going to be. I think due to, obviously, the rise in streaming, as well as some people still hesitant to go out. I still believe this industry this year will not be nearly where it was, and I think for the foreseeable future, it will not be where it was either. I think the movie theater experience is going to die down a little bit, and you'll see some closing. So for that reason, here's my 1-year target. I do believe, personally, my target for this company, it's $50, right? It's obviously below share price right now. Doesn't sound like much of a ticking time bomb, right? I believe there's more stagnation ahead before we hit that point. I do think there's a chance, and you see it in my low. My low here is $10. I think there's a chance this thing returns to ridiculous shortness levels. I mean, really, this is a lot higher. This stock used to be $2, by the way. I don't think it'll fall back all the way down to there. I think $10 makes sense to me, right? It's a company that's making $500 million, and I don't think that number is going to be incredibly different by the end of the year. Definitely won't be even $1 billion, revenue company. And if investors get tired of that and they don't like it, and you get bad news, and they move on to the next big thing, this stock could plummet. Now, my high doesn't really call for much growth. We're talking about $65 here. The stock's at 65, or at 58 right now. I think it could go up a little bit further, and that would only be based off of the retail investor buying more. Who knows what that looks like, but the institutions won't, obviously. But it's possible. But I think my target of 50 implies some stagnation, and I believe it's there. There's a little downward movement, obviously, involved, but I think it's going to be more of a stagnation period for AMC rather than a massive, I don't know. That's my opinion on the matter. For 5 years out, obviously I include market caps now for you, as I should. I think it's the right thing to do, okay? Give you an idea. My target's still $50, right? Again, this includes my stagnation period. I believe there will be a lot of up-down. The hedge fund investor fighting the retail investor. I think this is going to be a meme stock for a hot minute. But I still think $50, $25 billion market cap, and that even prior to pandemic levels, they were only bringing in $5 billion in revenue. So 5 times that for a company that's not showing any revenue growth, I thought was a decent valuation, frankly. Can't lie to you. $25 billion market cap of $5 billion in revenue, I don't think it's not expensive, but this isn't a company that warrants a great multiple, in my opinion. And I don't even know if they'll be back to $5 billion by 5 years. Can't lie to you. My high here of $80 does include it includes some positivity, right? There's a chance. $41 billion market cap. Why do I get that? Well, again, revenue is not the point here. I don't think revenue is why this thing could go up from here. It's entirely based off of really people keeping their sentiment alive and keeping their need for memes. As you, my favorite video game franchise, the Need for Memes Underground. It was a great one. You could design your own car and race everyone. You got to get those pink slips, baby. But anyways, $80 really here just includes normalized revenue. Say we get back to $5 billion, which at a $41 billion market cap, not incredibly expensive, right? 8 times that value is not incredibly expensive, but it includes a lot of positive sentiment from the retail investor still. It's got to be the retail investor that keeps this one chugging along. It really is. Because the institutions hate this right now, right? Doctors hate him. I don't know. Click this link to find out why. I mean, that's exactly what's going on here. Hedge funds hate him. And my low, I did it. $10 still. Seems crazy. I think there's still a lot of potential for downward movement, and I want to preface that with this stock. If you don't know what you're doing with AMC, you got to understand there's a lot of downward movement. We saw the short interest. It's incredible. We see the industry not necessarily recovering to where it was. And eventually, with 80% of shares held by retail investors, this thing could plummet in a massive way very quickly. So $10, because I think this stock will go back to where it kind of belongs here in the next 5 years. So that's my low target. Not necessarily saying it won't be that $5 billion market cap. Obviously, it will be close to what revenue it could be making then. Could be making less, frankly, as they shut down locations. We'll see what it looks like. But that's what I got for you today. Hope you had a good one.